What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to another video and welcome to number 120 of the market updates. It's been a minute since I did one of these. We've been a little busy, but we're fucking back. Now, I've got a few things to cover today. Number one, the commodities consolidation, in my opinion, is over. Gold and silver have broken out and confirm these breakouts on the higher time frames. Gold and silver have got my attention. Number two, Bitcoin has spent about 3 months now decelerating around 60K. It's been pretty messy, choppy price action. It is my opinion that I think that BTC and the crypto market at a whole is on or close to a bottom. And number three, few macroeconomic factors lining up, which contributes towards why I think that about gold, silver, and BTC. So with that being said, let's get into it. So we'll start off with gold, and we'll start off with a little bit of technical analysis here. So as you can see here on gold, got this monthly potential close for August, bullish engulfing. But the thing that got my attention was the weekly close from last week. Now, after spending basically 2 months in this consolidation range, you can see that gold, after topping out at around 5,600, has retraced all the way back down to just below 4K. It's about a 30% retracement off the highs for gold, 29.5% retracement off the highs. Pretty significant retracement for a $32 trillion asset class. We have spent the last couple of months decelerating in this box. I've marked this in here because it's basically this swing low here and the swing high here, and we've sort of been consolidating in this little zone. Now, we've now broken out of that zone. We've come all the way up here with a bullish engulfing weekly close for 2 weeks ago, which has given me that daily breakout, which we're going to have a look at in a minute. Now, on the daily time frame for gold, you can see here I've drawn in these lines of what I like to call invalidation. So instead of trying to get caught up in this choppiness and get messed around and basically just try and take small incremental trades that don't have an amazing strike rate, I've drawn in a clear invalidation of this high, a clear invalidation of this low, and basically mapped out this box and said, below here, I'm interested. Above here, I'm interested. In between, I'm not interested. It's a very clear, easy way for me to define where I'm right, where I'm wrong, where I might like to do something, or where I might like to sit on my hands. And you can see here that we closed on Wednesday the 5th, so a week ago Wednesday, we closed as this bullish engulfing candlestick, breaking outside of this zone. Amazing. I would have absolutely loved a retest of that. We didn't get it, so no trade entry for me there. And we impulsed higher. We've closed the following day as a little bit of a bearish high test, but never retested this, never really rolled over, and just continued to the upside. Now, we've come all the way up to this 43.80 region, where we have been decelerating for quite some time now. We closed last Thursday as a bearish engulfing. This looked a little rejection orientated, but we've subsequently closed Friday as a little bit of a low test, giving us a little bit of a conflicting weekly close here. It's a bit of a high test rejecting this level, so I'd like to see some follow through here. However, what I am watching for is basically what's drawn in on this daily time frame right here. We now have a daily breakout on gold. It's the first time gold has made any significant bullish move to the upside in quite some time. This was the flush, then we had a retracement, but that basically formed a lower high, which led to this sell-off. We've sat in here for a couple of months. We've just broken out to the upside. So my dream bull case scenario for gold is that we get a retracement to on or around 4250 to 4300 region with a decent rejection, little bit of a daily pullback play before decelerating, hopefully rejecting, and if we see a bullish continuation to the upside, there's an opportunity for me to entertain longs there on gold. Now, moving straight into silver, because it's the next one on the list, we basically have similar price action on silver with the monthly and the weekly timeframes. However, the daily time frame for silver is much cleaner. What do I mean by that? Well, you can see here on a daily time frame for silver, we had this all-time highs followed by this swift move to the downside, and then silver was actually pretty messy, pretty wicky, pretty messy in here. Then we started a bearish trend all the way down to here, and we've actually formed an inverse head and shoulders pattern on the daily time frame here with a little bit of a, it's not the cleanest one in the world, but a little bit of a downward sloping trend line here for silver on a daily time frame. Now, bullish engulfing close outside of there, straight into the daily 50 EMA, and we've got resistance up here around this 63,300 region, so no trade yet. However, We've now broken out of that, and I've got some of these lines drawn in here because we were looking at it on a 4-hour time frame as well. You can see we've got bullish market structure here. So there's actually a clean lower time frame break and retest of the higher time frame level. Breakout on a 4-hour, retracement, deceleration, bullish engulfing close there, move to the upside. Retracement, deceleration, bullish engulfing candle, move to the upside. It's kind of the same play that we want to see on the higher time frames is already playing out on the 4-hour. Now, what I would love to see on silver is a rejection somewhere of this level. We've got quite a lot of confluence factors in this region. We can move this over here. Got quite a lot of confluence factors in this region. We've got 63,300. We've got this daily 50 EMA here. It would form as a nice daily higher low with a little bit of a continuation to the upside if we can get it. Decent risk to reward, 3.3 to these previous highs, which is not that far away. So that's kind of my catch-up trade. If the gold thesis plays out, I think that the silver catch-up trade would also provide some good opportunities as well. Now, one of the things with silver is, we spoke about this on a webinar in QT a couple of weeks ago. You can see how in this weekly time frame, silver is currently 88% off the highs, away from all-time highs. Now, I'm not one to pull up a chart and fantasize about how far away we are from the highs because we haven't got there yet. However, we're not talking about an illiquid altcoin that has $10 million of volume a day here. We're talking about silver. We're talking about the second largest commodity on the planet, and we're talking about a catch-up trade that could potentially follow gold, which is a $32 trillion asset class. So this isn't some meme coin with no interest in it at all. This is a significant asset class. So for me, that represents pretty good risk to reward, room to move to the upside. Depending on where you're targeting, obviously that can be extended, but I'm not interested in saying, hey, look, there's 24-hour on the cards there. I'd probably be all out before then anyway. My point is that there's good risk to reward on the table for silver. Assuming we have a bullish breakout and a continuation for silver, there's good risk to rewards on the cards. So that's gold and that's silver. Now, before we do BTC, a little bit of a macro case. I want to talk about some macroeconomics now. So the first one is CPI. You can see here, last week we had CPI on Wednesday, year on year coming in at 3.4, slightly less than a year ago. Month on month coming in at 0.1, slightly weaker than anticipated. Now, what's come off the back of that? The chances of a Fed hike have been reduced. So the market is now pricing in a 33% chance of the Fed not hiking rates. Hiking rates in the September meeting, which I think is mid-September. There's a Fed meeting mid-September. Where is it here? Yeah, there. Cool. So there's a Fed meeting on Thursday, the 17th of September. So about 1 month from today's date is a Fed rate meeting. Now, markets are pricing in a 33% chance of a rate rise. However, the interesting bit of data there is that has come down from a 44%. Markets were pricing in a 44% chance of a rate hike. It's now come down to 33%. This is good. This means stability is re-entering the market. This is good for consumer confidence in the market. If there's less likelihood that rates are going to go up, it means consumers have more confidence in the market. There's more stability. Stability is good for psychology, and stability is good for markets. So what happened? Well, we can use gold as an example of this. Gold ran basically up to 2 monthly highs. That is the CPI day, right? So that is when the CPI candle was released. So we didn't really have that much of a huge variance in the news data itself. And yet off the back of that, gold pumped 9.4%. That is a significant move. It's run to basically 2 monthly highs. It's broken out of a 2-month consolidation and ran to new highs off the back of that reduced rate hike odds. Now, that's like an inflation hedge bid with a bit of central bank flow. That is not a rate cut bid, right? You've got other macroeconomic factors such as the People's Bank of China. They've had 20 straight months of gold buying now. July, they bought 20 tons of gold. They're moving from paper. They're increasing their balance sheet with gold specifically on it. A few factors at play here. The fourth and final thing here, S&P 500. We've actually looked at it a few times. Although I don't trade the S&P, right now I'm using it as a metric. and I'm using it as a metric for my gold, silver, and my Bitcoin thesis. Why? Because on Thursday, the S&P 500 made record highs. The S&P 500 on a weekly time frame, we drew in these previous retracements here. The S&P 500 had a 21% retracement here. We pumped all the way up. I was expecting a 30% move breaking out of the highs. That would take us all the way up to 804 for the S&P. So, bullish engulfing close last week for the S&P. Deceleration, we are making new highs, right? You've got the NASDAQ catch-up trade, which is potentially on the cards here, where the NASDAQ is still to make new all-time highs, even though the S&P is pumping. So there's a potential NASDAQ catch-up trade on the cards. Now, when the last index races to reclaim its highs, smart money starts to look for the next undervalued position. Now, I don't have a crystal ball, and this isn't financial advice, but what is currently the next asset class which is sitting oversold or at some significant lows? It's this one here. That's 50. Okay, let's be accurate. It's 50.18% off the highs. It's sold off to 54% off the highs. It's BTC. So my case for a BTC bottom is a little bit more than just a technical analysis case. It is a macroeconomic case. I think that we're going to have better conditions in the crypto market in Q4, and I think that those conditions have the potential to improve very quickly. But at the moment, that is hearsay. So what does that actually look like? Well, on a monthly time frame, you can see here we've got these two equal highs. We broke and retested it here. We pumped off the back of it all the way up to all-time highs here back in 2025, and then we've subsequently sold all the way off. What I find interesting is that we are decelerating at that same level. So when we had this bearish engulfing close through here back in June, my anticipation was BTC is going to continue to make new lows. The longer we fail to do that and the more we continue to sit and decelerate at those lows, the more inclined I am to think that the bottom is in. Throw in a few of those other macroeconomic factors we just talked about here, and I think we have a recipe for a BTC bottom. So on a weekly time frame, head and shoulders pattern, retrace, continuation to the downside, retrace, continuation to the downside, decelerating here, 52-ish% off the highs. Now on the daily time frame, to be honest, there's nothing for me to do until we break out from here. Kind of similar to the gold thesis I explained before. It just gives me super clear invalidations of where I'm right and where I'm wrong. Do I want to get long BTC in here? Nope, I don't. Do I want to get long BTC on a breakout from here? Yes. Do I want to get long BTC on a break and retest from here? Yes. Do I want to get short BTC on a breakdown from here? Yes. Nothing for me to do in here yet, but I'm starting to piece together factors which I believe contribute towards a BTC, a gold, and a silver breakout from consolidation. I think the bottom is in for crypto, on or close to the bottom. I could be off by a few weeks, I could be off by a month, but I'm pretty sure Q4 is going to be a bullish quarter for the cryptocurrency markets. I'm currently in a couple of crypto positions. I'm in a pump fund long, and I'm in a link long. Link long, super easy to break down because it's a breakout play. It's actually pretty clean. It was a bullish engulfing close above these recent highs. Basically the same as what I just explained with gold and silver. Easy to determine where you're right and where you're wrong. Stop loss just underneath here, back inside the range. Stops are already rolled on this anyway, so there's no risk on this now. Targeting this recent upside here for a 6-1. Running about 1% in profit at the moment. I've shaved about 10% of this position off already. Stops are rolled, so it's risk-free. Pump fund long, similar thesis, except earlier. Where's my pump fund long? Similar thesis on this, except earlier. You can see here on this chart, on a 4-hour time frame, clean break and retest. If we put this level on a daily time frame, you can see we've got this swing high here, which is capping price since May. Started the beginning of the downtrend, inverse head and shoulders pattern, bullish market structure the whole way up, nice clean price action. There, prices making higher highs and higher lows the whole way up. Nothing for me to do yet until we break this to the upside, which we did. Then we had a retest. The retest was the opportunity for me to get into this position. Little bit of deceleration here, and as soon as we had a slight amount of bullish momentum, I'm in. So I've already rolled stops, and I'm about 30% out of this position already. Just going to continue to ride this to the upside. Not going to stretch targets here. Just going to target these recent highs around this 0.03250 region. And that's it. That's my thesis. That's my 2 position update. They're the things that I'm going to be watching. I am trying to keep it super simple at the moment in terms of news for the week ahead. What do we have? What do we got? Australian CPI, US price index, PCE this week. Friday, Canadian GDP, and some benchmark payrolls. Okay, cool. Not too much in terms of news. Obviously, the US, Iran, Israel conflict is a determining factor in what happens geopolitically. But at the moment, markets are pricing in a lot of that already. I think that there is a broader macro rotation in play, and that's what I just spent the previous 15 minutes explaining. So that's my thesis. That's what I think is going to happen. And that's it. You guys and girls, have a wonderful week ahead. Happy trading. I'll put all the details for QT in the market update, as we always do. Have a wonderful week ahead. Let's get it.